Joining us now to discuss the Bitcoin markets is Edward Moya of OANDA, Senior Market Analyst covering the Americas. Welcome, Edward.
Thank you for having me.
So Bitcoin has been on quite a ride. We've been down, then up, and then down again over just the last month. Do you see markets stabilizing?
Well, right now it looks like Bitcoin is that correlation with equities remains intact, and you're probably going to see that it's going to be a bumpy ride for most likely a few more months. I think until we have the a better macro outlook, you're going to see a lot of choppiness here, and I think investors are really going to wait to see exactly how aggressive will the Fed be with tightening, and if we can really have a consensus agreement with how high rates will go, that might be what is needed for Bitcoin to continue to show signs of that it has bottomed out. But I think there's still a risk that we could see a retest of the recent lows, but I think right now there's still optimism here that prices are going to stabilize and eventually trade on its own fundamentals and hopefully much higher.
So what I'm hearing there is that crypto winter could be over as soon as Federal Reserve Chair Jerome Powell actually says it is. Can you explain a little bit more about that?
Well, yes. Right now, I think you're going to see risk appetite is really, hooked on Fed Chair Powell's words. And I think he's going to have to push back a little bit on, some expectations that they're going to pivot fairly soon. The Fed has to, get inflation under control. And I think you're going to see they're going to remain very aggressive over, for the rest of the year. So that means they have 3 policy meetings that's going to see an opportunity here where they can, continue to deliver fairly aggressive rate hikes. I think, despite, some of the weakness in the economic data, the economy is still in fairly good shape, and it can still handle these rate hikes, and it needs to, because if the Fed doesn't raise rates any further, inflation is going to linger a lot longer, and that could do a lot of structural damage to the economy. So I think you're going to see Bitcoin is really going to, wait to see exactly, when will the Fed soften their stance on tightening, and that's probably going to be the green light a lot of investors are looking for.
So Fed Chair Jerome Powell is going to be speaking at Jackson Hole later this week, I believe, on Friday. Curious for your expectations and base case kind of assumptions, given the importance of Fed policy in sort of current market environments.
Yes, well, I think everyone is in agreement that there's optimism here that we see the peak in inflation. But we have to remember that there's a lot of factors that could suggest we could still see inflation rise in the winter. The global energy crisis, supply chain issues from China as they continue to struggle with COVID at moments here and there. So I think what you're going to see is the risk for a more aggressive rate hikes is going to remain on the table throughout the September meeting and most likely into the winter. So I think what you're going to need to see is, investors want to see if Fed Chair Powell can convince markets that the Fed is going to remain aggressive with raising rates. And the key point is going to be that they're going to stay elevated for quite some time. The market is becoming very concerned that, a global economic slowdown is going to really weigh on this economy, and that, the U.S. could enter a recession at the end of next year. I think the Fed needs to, convince the Fed funds futures that rate cuts are not going to be happening in the middle of next year, that they're going to remain committed to letting this tightening really work and hopefully continue to support driving inflation lower. So I think you're going to see a very difficult environment here as we're going to be trading on the initial reaction from Fed Chair Powell, and even if he does kind of provide some clues that maybe they're willing to go at a much slower pace in September and possibly in November, that the markets will, not necessarily overreact to that. I think, the best case scenario for long-term, crypto growth is if the Fed remains aggressive in tackling inflation. We want to see inflation risks go away, and then you could see ultimately Bitcoin trade on its own fundamentals. And I think the short term, though, it should still remain very choppy. If Bitcoin holds 20,000 throughout the Jackson Hole Symposium, I think 20 to 25,000 is still probably going to be the key range we're going to see it trade in leading up to the September FOMC meeting.
So I apologize in advance. Talking about the Federal Reserve is actually one of my favorite things to do. I really enjoy talking about macro monetary policy these days. I've become a total masochist for it. So one of the things that I've noticed about kind of the situation that the Fed has found themselves in, which is very sort of precarious in a lot of ways, is that politics seem like they are probably going to be coming into play. Because, again, to the extent that either the Fed continues to hike rates or even to the extent that they back off, it kind of is a lose-lose politically for the incumbent party as we go into the midterm elections. I know that the Fed is supposedly non-political, but it certainly seems like they act in ways occasionally which could be construed as being done for political reasons one way or another for either party. I'm just kind of curious, do you think that politics comes into play here at all in terms of the Fed's decision making? Does it matter that there's an election coming up when we have these additional hikes, or perhaps not? I'm curious for your thoughts on that.
I think for Fed Chair Powell and his tenure as Fed Chair, politics have mattered in the past. I think right now, though, the Fed is when we're talking about the midterm elections in November, I think the Fed is really going to be focused on saving their credibility. The Fed's made many mistakes throughout this pandemic, and I think they were late in tightening. They really needed to be a little bit more aggressive, I think, with these rate hikes. And I think you could see other central banks, like the Bank of England, was much more advanced in their moves with raising rates. So I think the Fed is really they're kind of locked in a corner, because if they flip-flop completely and go dovish, that's really they're going to lose their credibility. And I think what you're going to see is the bond market is going to force the Fed into other actions. So I think politics won't play that big of a picture. And I think given the consensus right now, I think there is strong momentum here that your Republicans should have a strong outing. I think there's still they've other sensitive topics might motivate some bases, but I think that you're still looking at a much weaker economy. I think low and middle income families are not doing as well as they were a few years ago. So I think you're probably going to see we might get a red wave, and I think Fed policy might not necessarily do a whole lot to sway voters' minds. So I think Fed will focus on their credibility right now.
Okay, so I appreciate you going down that rabbit hole with me, Edward. Just one more question. So you mentioned in your prior answer that if Bitcoin holds around 20K, which is lower than we're at right now, as we go through the Jackson Hole Economic Symposium, that would be seen as a constructive thing. Can you give us some more detail about what you mean by that?
Well, right now, I think it was fascinating, because over the past few months, when everyone was expecting that cycle low, we were going to have that 80% retracement, where a lot of people were anticipating Bitcoin was going to crumble down to just below 14,000. Some people were calling for 10,000, and there was so much hesitancy to get back in. There was, why am I going to buy at 18,000 when I think it's going to go down to 10? And what we saw was Bitcoin started to make some higher lows, and eventually it made a couple of higher highs. I think right now, Bitcoin is the ultimate risky asset, and you're going to see that it will really, I think, take its cue from what happens with equities. And I think you're in a position right now where the majority of Wall Street, especially the hedge funds, they're anticipating some pain in the stock market. So that should weigh on crypto. But I think what's fascinating is that typically when you would see stocks go down 2%, you might see Bitcoin down 5% or more. That is starting to change. And I think that if Bitcoin continues to show that it's not going to exactly show that stock market weakness on steroids when we have these risk aversion days, I think you're seeing that more of the hodler money is starting to increase their exposure and add to their positions. There is a chance that the crypto winter could be over, and I think if that happens, we could see the momentum really come into place and take crypto much higher. So I think there is a potential where that scenario could play out. Is it the base case? Not yet. I think we're still really in for a choppy rest of the next few months. And I think there's too many big geopolitical risks with the global energy crisis that can really weigh on risk appetite that will ultimately dictate where Bitcoin goes. So I think it's not trading on its fundamentals just yet, but eventually it will. But for now, it's going to be a wild ride.
Thank you very much, Edward. One more rabbit hole. Apologies here. I saw the other day that the DTCC, right, the sort of bedrock financial transfer agent and custodying agent of the stock markets, at least in the United States, that they actually have their own blockchain project that they're now starting to push volume through. I believe that they reference between 100,000 and 160,000 transactions per day. That strikes me as kind of an interesting thing because the DTCC really kind of performs the role of a blockchain for the world of traditional finance in a lot of ways. And so their adoption of this technology, at least in a test capacity, strikes me as being significant, but I'm trying to figure out what the significance is. Do you have any take on this?
I think right now you're saying that blockchain has forced Wall Street, corporate America, and governments to kind of reassess how the future of money will be and the transfer of it. So I think you're going to see that in the end, innovation is going to win out here, and I think that you'll probably see that private projects will have a better opportunity to be successful. So I think this is anything that fosters competition. I think is welcomed, and I think in the end that you'll see whatever is the best method going forward will probably win out. And I think there's still strong optimism that the blockchain that is powered on the typical cryptocurrencies we've been focusing on will have a leg up and probably still, I think, have the potential to outperform. So I think there's still good optimism. I think it will scare some people away that you could see big government is coming to to take on blockchain and to get all the transactions. But I think it's still too early in there. And in the end, most of the time, big government does not do a good job.